Welcome back. President Muhammadu Buhari recently approved the establishment of a Presidential Infrastructure Development Fund, PIDF, which is to be managed by the Nigeria Sovereign Investment Authority, the NSIA. On Thursday last week, the National Economic Council authorized the initial transfer of $650 million to the NSIA from the Nigerian Liquefied Natural Gas Dividend Account as seed funding for PIDF. So joining me now to tell us more about this initiative and is the Chief Executive Officer of the Nigeria Sovereign Investment Authority, Mr. Uche Orji, who is joining us from our Abuja studio. Thank you for joining us on the show, Mr. Orji.
Thank you for having me.
Now, the NSIA was set up with 3 mandates: to build a savings base for the Nigeria people using the Future Generation Fund, enhancing the development of Nigeria's infrastructure, that's through the Nigeria Infrastructure Fund, and providing stabilization support in times of economic stress, that's under the Stabilization Fund. So explain the rationale behind the $650 million Presidential Infrastructure Development Fund in light of the existence of Nigeria Infrastructure Fund.
Thank you very much. I think that's a very valid question. It's actually not a contradiction in terms. It's not, they're not mutually exclusive. You have to think about it this way. It is an augmentation of capital transfer to the Nigeria Sovereign Investment Authority. Now, the difference between this and any other type of transfer that we have received at the NSIA is that this is now purely designated for infrastructure. The previous transfers that we have received, particularly in this government, where we received $500 million over the last 2 years, have been allocated across the other 3 funds. If you remember, the law says that we have to allocate at the minimum 20% to each of the 3 funds, and then the remaining 40% is at the discretion of the board and the management as to how we allocate it. Now, what has happened to the previous funds, that 20% of the fund had gone to the Stabilization Fund, 40% went to the Future Generations Fund, and 40% went to the Nigeria Infrastructure Fund. This new capital injection, however, is now purely designated for infrastructure. So it is not at the discretion of the board to now allocate it to Stabilization Fund or to Future Generations Fund. That's the only difference. Otherwise, it's going to function the same way every other fund of the NSIA operates. If you want to use another technical name, is NSIA Infrastructure Fund 2, if you want to call it that. But the reason behind this, and perhaps this is probably more relevant to your question, is that there are a few projects that have been designated to be tackled by the Presidential Infrastructure Development Fund. And these projects will now benefit from 3 things: NSI's own investment, NSI's ability to attract third-party investors into these projects, and also NSI's ability to develop these projects and make them commercially viable. And consequently, we believe, based on the plans we have with the government, these projects are going to be completed within the time frame that has been designated because of this fresh impetus of capital injection and even more to come into the Presidential Infrastructure Development Fund.
Yeah, what specific area of infrastructure project are we talking about here? Is it road? Is it the ports? Tell us.
Yeah, that's great. Thank you. At the moment, there are 4 projects in the road sector and then 1 in power. The 4 projects in the road sector are obviously the Second Niger Bridge, which we had been involved in previously. Now it's going to be innovated into the Presidential Infrastructure Development Fund with significant capital boost. There's the Lagos-Ibadan Expressway, which is an ongoing project as well. There's the East-West Road, and there's Abuja-Kaduna-Zaria-Kano Highway. And then in the power sector is the Mambila Power Plant. These are the 5 projects initially approved by the President to benefit from the Presidential Infrastructure Development Fund. And I believe that and I'm very confident that we'll be successful in executing the mandate of that fund. We'll be able to finish these projects quickly. And the rationale, of course, behind this is that if you look at these 5 projects, the budgetary approval or provision for them was less than 5%. Now, under the PIDF, we believe that we can get to financial close with almost 89% of the funds raised, and then go ahead and then raise another 11% of the funds from third-party investors. So there's a much higher chance of completion of these projects now that there is a clearer financing plan to get these projects through. So those are the five projects at the moment, 4 road projects and 1 big power plant. And Mambila is quite significant because of the scale of the project. It's a hydropower plant with the ability to generate peak power of 3,000 megawatts, which is somewhere close to 50% of what we currently generate in the country within the grid. And so I believe that this is something that will be very transformational for the country. And I might say also, they're all going to be designed to be economically viable. Not at the same scale, of course, but to a large extent, this will be returnable capital. And I think that's a big difference also in the way we're doing this versus the way it's been done in the budget.
So tell me, what are you going to do differently?
But 2 things we're going to do differently. First of all, you're going into this project now with a clear financing plan, okay? As opposed to going into a project with 5% budgetary provision, and every year you provide some money and you build some, you stop, and then you go back again the next year, you'll have lost some of the grounds you made in terms of the previous construction. This time around, there's a clear financing plan that will take us to completion. That's number one. So there's a commercial close and there's the financial close. So the financial close element to it is to say we are going in with a plan to get the financing through extra budgetary means. The second element of it is that we are going to bring third-party capital, which I think is going to help, obviously, in getting these things to completion. The structuring of it to make sure that third-party capital is returned, and by that I mean through commercial interests like tolling, as well as other commercial objectives within the road structure and, of course, the power plant, will make sure that these things are designed to be commercially viable and earn a return for the investor. So that's different. The third thing is obviously our ability to bring our project management expertise. We have worked with various parties who will ensure that certificates of completion are executed properly. Now, that's not to cast any aspersions to the contractors, but that means that we will have a direct feedback mechanism as to whether things are going right or wrong and manage these projects properly. And the final thing, obviously, is this commercial framework. These roads are going to be designed to be commercially viable. Somebody has to manage them to ensure that the income on the roads are properly accounted for and returns are made to investors. And same goes for the power plant. So the other things, obviously, which I probably don't know how much time I have to go into details, but just think about it this way. There is a commercial structure now that's different from having done it in the budget. The second difference is there's a financing structure that gives you visibility to financial close, as opposed to what has been done previously. That hasn't worked. If you look at all these projects, on average, they've been talked about for at least 25, 30 years, and they have never been done. So through the PIDF, we're very confident that we can get through financing close that is extra budgetary and through commercial third-party contributions to finish the project.
All right, so how will this funding now be structured to ensure that it works?
Well, how will it be? How will it be structured to ensure that it works? Like I said, first of all, this is the first seed funding. There's also more funding coming. And if you look at these projects, their total size of these projects in Naira terms is about 2.5 trillion Naira, or something over $7 billion in size. Now, the funding, about $7.5 billion, of which the biggest portion is obviously the Mambila power plant. The funding from the government, this 50 is the first tranche. There'll be more to come, where the funding structure we have is about $1.3 billion of cash injection. There are elements of Chinese loans that are currently being negotiated, I believe, for completion sometime before the end of this year. That will also be put onto all these projects. And then we expect that, reaching out to pension funds, insurance companies, other investors, institutional investors, both domestically and internationally, we can raise the remaining 11%. So there's a lot of smart people working on getting this investment memorandum out there and trying to get investors' interest between now and when we finish the construction of these projects, which on average is somewhere between 3 years for some and 7 years for the others. So there is a financing structure, 650 plus $300 million of NSIA's own money going into it, as well as future contributions from the government and the funds we're going to raise from third-party investors. So that's how the funding is structured. And I believe that you're going to see significant momentum in all of these 5 projects that I mentioned because there's just there's clarity to how the funding is going to work.
And when do you expect to receive the funds? And when will capital deployment commence?
That's a good question. We expect the funds to be with us anytime within the next few days. We anticipate the capital deployment to start within the first 2 weeks of June on these projects. Now, some of the projects are obviously seasonal in nature, in the sense that if you look at the second Niger Bridge, you have to make the funding available immediately so that we can take advantage of the dry season in terms of making some progress. And by the way, there's work ongoing at the moment on the bridge, but I think it's going to accelerate. So we believe that there will be a significant capital deployment starting in June across all of these projects, at least the major road projects. You'll see some significant activity as we deploy the first tranche of capital. This is not going to sit with us for a long time at all. This is going to be deployed quickly because on that basis, we'll get the next tranche of funding, and then we're able to reach out to third-party investors to invest with us. I am very, very confident that you will see, particularly those who live in Lagos who are struggling with Lagos Ibadan, especially the Shagamu end of it, you'll see some significant progress made. Okay.
So Nigeria's stock of infrastructure is estimated to be between 30% to 35% of GDP, which is below the 70% international benchmark. Again, the available pool of infrastructure are disjointed. How is the NSIA helping to bridge this gap?
Sure. Now, that's a very good question. I'm even surprised we're about 35%, because in reality, there are certain aspects of our infrastructure where we're way below those benchmarks, way below, even way below the numbers you cited. Specifically, you can speak to power, you can speak to ports infrastructure. It's quite embarrassing that a country of our size and scale will only depend on the ports in Lagos when we have over 1,000 kilometers of waterfront with actually about 5 other ports that can be made functional. And so we are looking at these areas for investments. What do we do? There are 3 pillars that underpin how we look at infrastructure. The first is NSI's own direct investment in infrastructure. And here you've seen us active in agriculture, you've seen us active in healthcare, you've seen us active in toll roads, obviously with some of the announcements that have just been made. You've seen us active also in power, gas to power, gas supply, gas processing. These are the areas we're making direct investments. Second element of our work is actually creating co-investment funds. We have successfully created a co-investment fund with the Old Mutual backed fund called UFF of South Africa. And we've made a few investments already. We're investing in soy and maize farm, along also the whole chain of processing. And that fund is also now investing in other areas, cassava in Edo State, citrus in Gurara. So that's a fund that was a 50-50 fund between the NSIA and this third-party specialist agriculture investment company called UFF that was backed by Old Mutual. Again, it's a registered fund. It's out there raising capital from third parties. We're doing something similar also for industrial real estate as well as middle market industrialization. So that's the second pillar, co-investment funds. We are going to be very active here because that is one where we can credibly attract foreign investments into the country. Now, the third pillar of NSI's investment in infrastructure is in supporting and creating financial institutions that will enable infrastructure investments. And here's what I mean. I'll give an example. One of the biggest challenges with pension funds and insurance companies investing in infrastructure is the absence of a credit enhancement scheme. The NSIA, working with Garantco, created a company called InfraCredit. At the moment, the equity is 100% owned by the NSIA. Co-capital, contingent capital is provided by Garantco. We are looking at bringing other forms of capital. This company's job is to ensure that infrastructure bond market can become active. When you issue an infrastructure bond, they provide an enhancement that helps you extend the tenor and lower the cost. The first transaction they did was that of a captive power plant that was borrowing money somewhere in the mid-20% range. And post the restructuring by InfraCredit, their interest rates came down to around mid-teens, around 15-16%, from something like 25%. That's value. So we're expecting that this organization will grow and make the infrastructure bond market active and expand it. And that will enable infrastructure projects being funded by pension funds and insurance companies. The NSIA is also the lead investor in the Nigerian Mortgage Refinancing Company, which is helping provide lower cost mortgages to people. The NSIA is one of the lead investors in the Development Bank of Nigeria. And we're participating along with Federal Ministry of Finance and the Family Homes Funds. These are necessary financial institutions that will fill the gap. And I'll also mention, finally, the commodity exchange.
I just wish we have enough time to talk more about it. We just have quite a lot to talk about this infrastructure issue. Hopefully, we will have you again on the show. Thank you very much for your time. Mr. Uche Orji, the CEO of Nigeria Sovereign Investment Authority.